Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, December 17th at about 12:30 p.m. Eastern. Well, today so far, the major indexes are lower than yesterday, but a couple of them are up slightly on the day. We'll look at that. And that's as we experience the expiration today of stock options, index options, stock futures, and index futures. This is a quarterly event known as quadruple witching that typically comes and brings in heightened volatility, and it's doing just that. And on that note, let's go on and look at three charts that could give us some insight into the week to come. As we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, the SPY's last all-time closing high right here took place on December 10th at $470.74. That was the closing high. Closing high, of course, is we consider it to be maybe more important than an intraday high because the close is where commitment comes in. So that was the all-time high, 470.74. Back here, when I captured this chart today, the SPY was sitting right just atop its green line, the 50-day moving average, at $461.21. Now, as you know, back here, the SPY fell down to around December 1st, fell down to this 450 zone, just creeping down below the 50-day moving average here, but then bouncing back up above it. And now if you look at this whole area right here, look at these candles and then back up and compare them to the candles to the left of them. Look how much more orderly these are and how these candles have wider trading ranges during the day. That indicates that the bulls and the bears are fighting. The bulls are strong enough on this day to hold it down. Next day, the bears are strong enough to push it. I'm saying that backward. The bears were strong enough to push it down back here on December 1st. Then the bulls were strong enough to push it back up. But we have a lot of indecision here. This looks like the SPY doesn't know whether to fish or cut bait here. Of course, we've got a lot on the table going into the new year. So right now, again, the SPY is white knuckling this 50-day moving average here. The 50-day moving average happens to be a pretty darn important trend line for the SPY. As you can see back here looking left, the SPY S&P 500 has climbed this 50-day moving average for months and months and months. Fell down through it in September, fell down to 426 down here, then rallied back up, went into neutral position end of October, November, then as I said, fell back down to 450, now back up again. So it's anybody's best guess here. One thing we could notice if we wanted to is we could go down to the 14-day RSI down here on this scale right here. And you can see, and we talked about it when it was happening at the beginning of November, you can see how the 14-day RSI line moved up into the overbought position, moved above that 70 line. And I told you when that happens, price will usually, when it gets overbought, price will usually head a little lower at some time. Now, that's exactly what happened. But look here. This is a technical thing that we can look at here, a technical signal if you like. Look here how the price on the SPY has moved up to that 470, back down, back up to 470 again. But note down here that the RSI here, this line did not go back up as high as it was before. It did not go back up over the overbought line of 70. So we call this a negative divergence, meaning price is making higher highs here, or at least even highs, and the RSI, however, is making a lower high. So sometimes that can kind of mean it's very, very wise now to get a little more conservative if we have a negative divergence on the RSI, on the SPY. So once again, the upcoming week is going to tell us a lot about the market strength. Can it indeed move back up and push through and above this 470 resistance line? Or is it going to struggle down here, hopefully not going too far below the 50-day moving average, because that would not be a bullish move. And so who knows, maybe we get a Santa Claus rally, maybe not, but stay tuned and trade wisely. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. As you all know, this represents the NASDAQ 100, a very important index in our market, with top components, Apple, Amazon, Facebook, and Microsoft, Intel, those big leading tech stocks. Now, the QQQ made its all-time closing high, and we talked about this before. It's held on November 19th at $403.99. Now, since then, the QQQ has fallen down to its 50-day moving average, rallied back up, then come back down again. And today, here's another example, up on the day, but down since yesterday. So if you're looking at CNBC, it's going to say the Invesco QQQ is down, and it certainly is from yesterday's trading. However, it's up on the day. So we're looking at the QQQ right now trading at $385.83. Thing is, it is just below this 50-day moving average. It's really, really cutting it close here. We had the prior lows back here at 380, 381. Then price jumped up, and just like the candles on the SPY, a lot of these are wider trading range during the day than we've seen earlier in the year. The bulls are holding it up. The bears are pushing it down. Today at the open, the bears pushed it down at the open, and again, now it's just holding on for dear life here, right just below the 50-day moving average, which is coming in at 387. The number we want to watch here is 380, 381. In order to stay bullish, we don't want the QQQ to come down and move down below 380. Now, if it does, we have these lows back here, down here at 353. We have the 200-day moving average coming in here now at 357, 358. But this pattern right here, we don't want this to break lower in order for the Qs to remain bullish. And so if you do have any high-tech stocks that haven't fallen already, most of them have, please do keep an eye on them, and please remember to firm up your stops. So we will keep an eye on the Qs in the coming week and make sure that it doesn't break that 380 line. If it does, again, we need to get more conservative. Our final chart today is one we haven't looked at in a while. It's a daily chart of the iShares U.S. Medical Devices ETF, the IHI. It has 65 holdings. Holdings include Thermo Fisher, Abbott Labs, Danaher, Medtronic, Edwards Life Sciences, and more. Now, the IHI made a new all-time closing high, whoops, right back there, September 8th at $67. From there, it made a very steep move up here, which was absolutely beautiful, but when moves up are much more than 45%, you can pretty well guess that they're going to start selling off a little bit. Especially, we saw this overbought RSI right there. We just talked about that on an earlier chart. And yes, of course, it got overbought and price started heading lower. So price came down here from the IHI down below the 20-day moving average, the 50-day moving average, and broke down here to September-October low of 61. Then it rallied off of formed a base here, a small base. Then it rallied back up over the 20, back up over the 50, hung around for a while, back here up at 66, couldn't maintain, and then fell back down. back down to 61 again. So it held there at 61. In the last few days, it's ramped up higher again in the last week. And now, like so many other industry groups, it's trying to make up its mind which way it can go here. Now, I've shown you in the short term here, we do have a triangle forming. We always like price to break out of a triangle no more than 2/3 of the way through it, because that leads to a pretty, usually can lead to a strong breakout if that happens. And this, of course, right here, because of the market and the way it's feeling today, the market in general, this is a big if here. So I wouldn't be going all in right away, but my plan is this. If in the coming week, if the IHI can move up and just stay here above 65, I want it to start moving higher here. And if it can break out up above these highs, if it can break up a little higher here, I will add a small position of the IHI to my trading portfolio. I'm going to start my initial stop low here at $60.50, just underneath the 200-day moving average. Now, when and if the IHI moves up and over $66, I will add to my position, and of course, by then I will have a trailing stop. So I know this is a conservative place to be. I get that right now. But that's going into this next week, and the 1st of January, I would like to have some of my powder in some conservative positions. And this is an orderly, the IHI tends to be an orderly chart. I like orderly. You get in less trouble that way. So, okay, so you may want to keep an eye on the IHI in the coming week. Now, please know that this is the perfect time to check out my online training programs and make sure you're ready to start trading as best you can in the new year. These programs include our flagship training, 7 Steps to Successful Trading, how to swing trade successfully, very popular program, how to trade the trend for profits, plus 3 winning setups, how to read charts, bottom fish like a pro, and many, many, many more. These programs can help you increase your gains quickly and easily, and as I said, this is the perfect time to take some time to invest in yourself and get ready for the new year. To see all of my online training programs, simply go to the link on this screen right up here or click on the orange button below. Until next week, happy holidays. Keep green on your screen. I'm Toni Turner, and this is The Market Now.